Here's what our employment tax rate structure looks like. So employment taxes for 2021, these are adjusted every year, or well, the FICA cap is adjusted every year. We'll talk about what that is. So you can see that for Social Security, which is one part of our employment tax scheme, 6.2% is on the employee, 6.2% is on the employer. So for every dollar of wages you make, there's a 12.4% Social Security tax that's shared between you and your employer. But that is capped, right? So it's 6.2% up to in 2021, 142,800. And again, that number is adjusted. So in 2020, it was about 137,000, and it goes up every year with inflation. Medicare is largely flat at 1.45%, but there's a special healthcare tax that kicks in for single taxpayers at 200,000, for married filing joint taxpayers at 250,000. That's an additional 0.9%. And that's what takes 1.45 up to 2.35. So here's another way of looking at those exact same tables. So I personally prefer this version of it. It's easier for me to understand because it's set up like the brackets that we looked at before for estate taxes, and it looks more like the income tax brackets as well. So Jack Shepard is a single doctor, generates wages of $6,000 in 2021. What is Jack's FICA tax? So FICA is another term for kind of the combined Social Security and Medicare tax. I don't even remember what FICA stands for anymore. So if he makes $6,000, fairly straightforward calculation. We're going to take $6,000, multiply it by 12.4% for Social Security. And again, that's the employers and the employees share together. And Medicare is a flat 1.45% because 6,000 is so much below either of those thresholds. For 60,000, we're basically going to do the same thing. 60,000 times 12.4, 60,000 times 2.9. That gives us the cumulative both employee and employer share. Whereas at 600,000, we actually have to do a more complex calculation. So at 600,000, we're above the FICA cap. So that means the first 142.8 is going to be subject to 12.4%. But then everything above that, so everything from there all the way up to 600,000 for Social Security is taxed at a 0% rate. Whereas for Medicare, for the employer, all of it is taxed at 1.45. So 600,000 times 1.45%, that yields the employer's share. However, for the employee, since Jack is single, the first 200,000 is going to be at 1.45, but the remaining 400,000, so that increment from 200 to 600, is going to be taxed at 2.35%. And that, again, that's for Jack's share because he's the employee. So I want to talk about employer and employee share of FICA taxes for a second. So our boy Steve works at Scoops Ahoy, and he pays wages of $100 per week, per day, doesn't matter to me. It's just a hypothetical number. His net pay after employment taxes is only going to be $92.35, right? And that's because 7.65, that's the 6.2 plus the 1.45, is going to come out of his pay, right? So his net pay will be reduced. And of course, his employer is going to pay the same amount as well, right? So they're going to pay $7.65 of taxes on the wages they pay Steve. That's above and beyond the amount withheld from Steve's pay. So really, for the employer, for Scoops Ahoy, Steve's actual cost is $107.65, not the $100 they pay him. So if you're the manager at Scoops Ahoy and you say, well, look, the reality is Steve's services are only worth $100. However, he's costing me $107.65. Well, that's because I'm overpaying him. Really, I should pay him $92.89. And that is exactly what shrewd corporations do, is they don't look at your salary as your total compensation. They look at your salary plus the taxes they pay, plus the benefits they pay you. And that's how they measure the value of the wage they're providing you. And so as a result, there's a pretty good argument that Steve and that almost all employees are actually bearing the burden of both halves of employment taxes, not just the part that's withheld from their pay. Okay. Let's talk about the individual income tax formula. Now, this class doesn't focus on individuals. That's actually Accounting 503. But we can't walk away from this tax class not knowing how an individual income tax might file their taxes. So we have to at least give it some attention. So this maps basically directly to the book. So total income less any exclusions from income gives you gross income. You would deduct deductions for AGI, so those are deductions above AGI. Then your from AGI deductions are your either the larger of your itemized or standard deduction and the qualified business income deduction. After you deduct your from AGI items, you get taxable income. To that you apply, that's our base, so we'll apply our rate. We'll get an income tax. Think of that as the pre-credit income tax. Then we're going to apply any tax credits that we're eligible for. Then we might add in any special taxes. So self-employment tax is reported through a income tax form. The net investment income tax is reported through your income tax form. So those get added in. And then what you do is you compare your total taxes to your payments, and you either owe the government money or the government owes you money.